It's Monday and the beginning of a new trading week. The major U.S. stock averages are starting off on a mixed note, and we have plenty to pay attention to this week, including corporate earnings. Joining me now is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, we have corporate earnings at the end of this week and a handful of economic data. We did get that U.S. jobs report, so we do have a better idea of what's happening in the labor market. But what are you paying attention to this week?
I think it's going to be all about earnings, and I think the earnings are going to have to prove themselves in order for these lofty heights of the indices to continue to move higher. So, we see the Dow basically struggling, trying to get above that 20,000 level. But I suspect that if we get one or two good earnings reports from some of the industrials, and I think 20,000 will be history. But basically, the earnings are going to have to come in at both top and bottom line achievements, because otherwise I think the market might be headed into trouble.
And of course, when it does come to the earnings reports, we'll be paying attention to the finer details, especially given the lofty valuations right now. We do get economic data this week out from the U.S. as well as Fed speeches. What will you be paying attention to from the Fed speeches?
Well, Fed speakers, it seems that they're all singing to the same tune. Obviously, they're all basically saying that 3 rate hikes next year looks appropriate, and that just tells me that we have a hawkish Fed on our hands. And as far as earnings are concerned, we are going to have to see perhaps some of the multinationals come in with earnings that are not being affected by the strength of the U.S. dollar. So I think that's probably going to be key.
And last but not least, before we wrap it up, I do want to get your take on the latest comments coming out from Prime Minister Theresa May over in the UK. Now, we know those comments did have an effect on the British pound, but she did say that she couldn't say whether a hard Brexit would actually happen, but instead she'll do what's best for the British economy, given that it will no longer be a member of the EU. So how are you taking those comments into account?
Well, I think as we get closer to the formal announcement of beginning the process to exit the EU, I think that might cause some interruptions in the marketplace. By that I mean we'll probably see the British pound weaken. We could basically see the British pound get down to 115 before the process actually begins, and that would mean a stronger dollar, and then of course that could be a problem for stocks in general. But again, it'll be very interesting to see how the multinationals held up in lieu of the stronger dollar.
Well, Peter, thank you so much for joining me at the beginning of this week. And next week is a holiday weekend, so hopefully we see you at the beginning after the holiday.
My pleasure.